this cycle than we've ever been in the past. Both because of the strength of the balance sheet, the number of products that are actually working now in crypto. It's not just a speculative asset class anymore. That was in the early crypto cycles, it was largely speculation driving it, but now there's more and more use cases that people have, like DeFi and NFTs and DAOs and social and identity, and like all these things are starting to be used more and more. So my guess is that the cycles will get a little less dramatic over time. From like the percentage drop from peak to trough has been 85%, like in the previous cycles. I think we're at like maybe 55% or something dropped now from the peak this one, but I'm guessing it may be a little bit more moderated than previous ones. That's just a guess.
What would make it more moderated? I mean, I have some ideas here too, but like why would it get kind of less dramatic?
Yeah, well, two theories on this. So one is that so there are more use cases now than just speculative trading, right? Like, and things like NFTs are still being used, and so anyway, the use cases are there. The other reason is that in prior crypto cycles, at the end of the cycle, the up cycle, we saw prices like kind of go vertical for a little bit, and then they crashed down. And that didn't really happen in this cycle. I think probably because the broader macro environment went down, like the broader economy went down, and I guess people were treating crypto like a tech growth stock or something, and so it got sold off similarly. Whereas I thought they were going to be treating crypto as more like an inflation hedge a little bit, but I guess we're not at the scale yet where that's quite true. So maybe we need to do another 5-10x from here. But anyway, we didn't see that price go vertical right at the end. So it may be less than an 85% drop peak to trough. But look, this is all a guess. None of this is an investment advice, and who knows? I could be completely wrong. But that's just one thought I've had.
There's another take on this too, and it's crypto has some subset of people who hold crypto are fervent, ardent believers. They understand the technology. They know they have a strong conviction on the potential for this market. And when they purchase crypto, it's kind of a forever purchase. They're just going to, buy it and hold it, and they'll eventually use it, but they'll use it when, Bitcoin is basically used as a currency, right? They're not going to ever kind of cash back out to fiat. I'm describing the most extreme sort of holder here, right? But the viewpoint says, that segment of people is growing just on an absolute numbers basis over time. And when people panic in market corrections and sell, well, generally speaking, the flow of money goes from people who are panicky to people who are long-term convicted buyers and holders. And so that's one take on why, every market cycle isn't going to have such a huge correction peak to trough, because that segment is growing. And that provides kind of a backstop to how far it could drop.
Yeah, I think that's exactly right. There's more holders today than there were like 3 years ago, and there's going to be more holders 3 years from now probably, right, than there are today. So it's hard to imagine we're sitting here in 10 years and there's fewer people using cryptocurrency. It's just like nobody really knows what's going to happen in the next year or quarter or whatever, but like the long-term trend I think is pretty clear.
I would love to see, by the way, some data from Coinbase on this, because we can see who's a buyer and a holder, and we can kind of release some macro numbers around how the percentages are changing and shed some light on kind of consumer behavior here. But okay, so we might be potentially hitting another market cycle. Again, none of this is investment advice. We don't know what's going to happen. But do you have any lessons that we've learned from past market cycles? Do you prefer a bear cycle or a bull cycle, just personally, to be building in Coinbase? Like, what are the lessons we've learned?
I think people sort of assume like an up cycle is good and a down cycle is bad, or a downward moment, but it's not really true in my case. The up cycles, look, they're nice in the sense that they bring a lot of new people into crypto. It creates a lot of buzz, a lot of marketing out there. The downside is you're just basically constantly focused on scaling, and it's like all hands on deck just to keep everything running, because there's so many new people coming in. Like, we've seen traffic and the company and the industry grow like 3 to 5x in a year, which is quite strenuous compared to most how most things grow. But then in down cycles, okay, people sometimes have like doom and gloom. They over rotate on like the downside. They get distracted, whatever. But the benefit of it is that for companies who don't do those things, like Coinbase in past cycles, we tend to get more time to focus on doing innovative stuff, building the future of products. We actually tend to pull ahead because like sometimes competitors pivot and they go do other things. And we try to just stay focused, and it's a good moment to like run a leaner, healthier company as well, in a sense. Like, every company accumulates unnecessary things that either you're paying way too much for some vendor you don't need, or like you have way too many headcount on one project and you kind of reallocate that. So yeah, those are all examples of things that are beneficial in down cycles. I think like the most high growth tech companies, they just grow like 50 to 100% a year. And that's probably like a little bit of an easier, or maybe even 20% a year, whatever. It's an easier thing to plan for. And crypto, it's basically like, well, are we either gonna 3x this year or negative 20%? And it's, you know, it's like, it's a much harder thing to plan for, but you know, whatever, I'll take it.
I kind of have this view too, that, you know, it's really important for crypto companies to have people inside those organizations that have been through some of these cycles, because they can provide the sort of measured advice and perspective on what a down cycle really looks like, how it feels, and give the rest of the company sort of a calming effect. Maybe to give an example here, you know, the last down cycle between 2017 and 2020-ish, you know, crypto went through this pretty big lull, another sort of crypto winter. Man, I remember this because Bitcoin was kind of trading around $6,000, and it was trading there for probably about a month or maybe even 2 months straight. Like, didn't really vary, didn't really move. We're like, oh, Bitcoin's like a stable coin now, ha ha ha, you know? But then one day, over the course of, I think it's maybe 1 or 2 days, but very short time frame, it crashes down to under 4,000. And after a year and a half of a bear market, you know, we thought we'd found a bottom at $6,000, and then wham, bottom gets taken out from us. We go straight down. I remember that moment, and I was like, am I wrong? Like, is this thing going to zero? Like, my faith was like questioned a little bit. And I've always believed in the technology. I always believe this is going to be something disruptive and innovative. And I quickly was like, no, like, this really is disruptive. It's okay. It's just the market's being irrational. But I remember in that moment, I was like, whoa, what's going on here? And I was kind of scared and confused. And my takeaway is, you know, as exuberant and exciting as the up markets are, and the moments of euphoria, how emotionally exciting that is, it's almost in reverse in a bear market. It can be as gut-wrenching and as testing as the euphoria in a high market. So we need to kind of prepare ourselves for markets to be irrationally high and irrationally low, and recognize that we are like humans who also have psychological responses, and we can also feel the depth of that emotion.
It's true. Like, when everybody is fearful, that's kind of like the worst time to sell usually. And when everybody is exuberant, it's kind of like the worst time to buy. You know, I think all of us have had that experience where we bought some crypto in an exuberant moment or something like that. I don't really like this word faith, because it implies like, well, it's about blind faith or something. And look, nobody can predict the future, right? Certainly not us, not anybody. I think of it as like, crypto is not just one thing now. It's a much broader idea. It's kind of a whole area of research in computer science and cryptography. And whether any particular crypto will work, or there'll be some flaw, or like whatever some country does or something, like, none of us can fully predict that. But the general idea, it's hard for me to imagine, like, you can't really uninvent something once an idea has been released into the world. And if there is an issue, it's just people are going to iterate on it, right? Pick your worst black swan scenario at this point. Like, somebody can iterate on it at this point and fork a chain, or put out a different chain, or upgrade a cryptographic algorithm, or like, it'll get a foothold in a new geographic region or whatever. So that part I have a hard time seeing like massive failure modes at this point, but any individual coin or geography or whatever could have stuff.
Yeah. It's funny, you know, my mom often asks me what's going on with crypto when prices drop or news headlines hit. And, you know, it's just indicative of one of my pieces of advice to people who are relatively new to crypto is get your own conviction on the strength of the technology. Conviction is not faith. It's just it's recognizing that there is real innovation happening in crypto. And if you look at the technology and look at kind of what we're accomplishing here and the new tools and things we're doing, there's a lot of innovation. The key fundamental thing for me is I believe innovative things turn out to be disruptive. Over some time scale. I don't really know the time scale, but they end up being disruptive. And crypto is very, very innovative in a number of dimensions. And it's hard for me to sit here with a straight face and say, yeah, it's innovative, but it will never be disruptive. No, in fact, we can see a lot of the disruption happening. So I agree with you. I don't know what's going to happen with a specific coin or a specific project, but the industry as a whole, this is very innovative stuff. And just believing in the tech becoming disruptive means that I can tune out all the market noise. And that's been very calming for me, at least. Helped me get through a lot of these bear markets.
Totally. I honestly try not to look at the market that much. And it's hard, just like anything. It's kind of an addictive thing, but like, it doesn't mean it's healthy. So like, I basically just, honestly, our strategy doesn't really change that much, regardless of what the market is doing. It's basically, we're just trying to build great products and services for customers. And if we keep doing that, a lot of the rest will work out fine.
Later on, actually, I wanted to ask you about what you're excited about in crypto, but why don't we just ask it now? Let's talk about some of the things we're excited about, some of the tech innovations that are coming that get us all riled up?
Yeah, I mean, so there's a few things. You and I were talking about this earlier today a little bit, but I like this idea of the wallet evolving to include other things like your identity. And if you have an identity, like let's say with ENS or one of the other standards, why not have a profile associated with your identity, like a public profile page? And it could be built entirely on on-chain data, and there's various interfaces through which you could view your profile, but you could have a variety of things connected in there, like your like a reputation score that could be used to get loans, almost like a FICO, or access to certain things, or to know that you're paying a verified merchant or the right Justin Mart or whatever. And then you could have POAPs in there, right? Like places you've been, like NFTs that you own. I think once you have a profile page and an identity, you might as well have like a follower graph and a social feed and like a social network built on top of this. And there's some really interesting protocols out there in this regard as well. And then like creative people should be posting stuff there, not just like status updates, but their actual work itself, like music and videos or animation, like whatever that they're into, and directly monetize it, all the things that we've talked about, right, with NFTs and all that stuff. So I do think the wallet analogy is going to expand. And actually, if you think about your physical world wallet, it also has your ID in there usually, and it doesn't just have money. It might have like cool photographs that are important to you, or like whatever. So your library card, like some concert tickets that you went to, right? And so I do think the wallet is kind of an apt analogy. And anyway, I'm really excited about that, and hopefully we can build a lot of that stuff into Coinbase Wallet, our self-custodial app.
Yeah, is wallet even the right word here? I mean, it's more than just like a wallet that holds your identity. It actually becomes your past behavior. It's like your credit score. It's so much more than just pieces on a paper, right? Like it's something more expansive.
Yeah. It's also your identity, your wallet. I mean, a lot of people have been asking me that too. They're like, is wallet the right word? And then I'm always like, I don't know. What's a better one? I haven't found one better that I like yet. But yeah, I'm open to it. Maybe there is one.
Yeah. The underlying thing here, though, is, we're excited about I'm gonna wrap it up in a high level word here, the coming application era of crypto. Mm-hmm. But really what we're pointing at when we say applications is, look, it's going to turn more social. Like you're going to have your past behavior, your identity, so many elements that are core to who you are as a person represented on chain, and people being able to build applications that tap into that in powerful ways. Mm-hmm. Not just tapping into it in powerful ways, but also recognizing who you are and what you like.
You're right. I mean, that's the kind of stuff that you should have on your profile if you so choose. That's part of why we keep saying like crypto is really the next internet. It's the next iteration of the internet, and a lot of this stuff's getting rebuilt. It's fascinating to me, just as an aside, by the way, that like Google is not indexing this whole piece of the web right now. Like they're not indexing decentralized identities and like NFTs and smart contracts and like new assets that are getting created and badges and credentialing. And so it's almost like a dark corner of the web. And I think there's like a lot of interesting opportunity in that too.
Yeah, speaking of opportunity, how's Coinbase positioned to take advantage of these coming shifts, these coming applications?
Well, look, I mean, we're a company that's not just one product anymore. We have a portfolio of products. There's about a dozen of them now. You can go to coinbase.com/product. We're actually trying to make it easier and easier for people to like switch between our products. As many people, when they're signed in, they don't actually know how many products we're offering. Coinbase Commerce and a self-custodial wallet. And so, I think we are basically becoming a company that it's based around repeatable innovation. We have a 70-20-10 resource allocation where 70% of our resources go towards the core thing that makes most of our revenue today, which is largely trading based. 20% are on these adjacent bets, and 10% are these venture bets. And so we're collecting a portfolio of different products. We want to have people inside the company try like really ambitious moonshot stuff. It's okay if it has a higher chance of failure. And then ideally, like these products are nicely integrated in various ways so that, if you buy your crypto one place, maybe it's just one more click to vote in a DAO or to buy an NFT, or you don't necessarily need to be moving your stuff to so many different places. My hope is that Coinbase adheres to the true principles of decentralization, Web3. So it's like, hey, if you don't like us, you can move your stuff to any other platform. None of it is like a lock-in. It's all based on open standards and stuff. But ideally, it's just easy to do it in Coinbase, and it's kind of like a super app over time. And it has more and more functionality, both first-party functionality and third-party apps.
We also recently released the DApp wallet, which is a new retail product. I'm particularly excited about this one, but I wanted to get your color on it as well. Can you explain what that is and kind of why it's exciting and interesting?
Yeah, for sure. So inside the main Coinbase retail app, and the Coinbase wallet, our self-custodial app, we wanted to make it easy for people to access third-party applications. And so basically we have like a DApp marketplace in there. It's a browser where you could load up any kind of third-party app, whether it's, you know, a decentralized exchange, like an NFT marketplace, games, like all these new things that are coming up. There's like literally thousands of these dApps out there. And so what's cool about it is that when you go in there, you can not only see ratings and reviews of different apps in different categories, but if you open one of them, you know, your wallet is already connected. All your funds are ready to spend if you need to do that. Your identity is connected into it as well, like increasingly with ENS. So it's basically getting rid of a lot of the friction to try one of these apps. Like you don't necessarily need to install a Chrome extension, move your funds over, like wait for it to confirm, you know, switch to Polygon network or whatever. Like we're trying to just make all this stuff seamless so for the average user. And I think that's how we're going to get to like 1 billion people using crypto. Yeah,
and the innovations behind the scene are really powerful too. What we're really also kind of enabling is users don't have to download a native crypto Web3 wallet and manage their own security, which is the one fundamental trade-off to self-hosted or user-controlled wallets is, well, you are given 12 words. You're given a private key, and then that responsibility to safeguard that private key, not have it get stolen, and not fall myriad to a number of scams or what have you, it's your responsibility, which is good and bad, right? It's your responsibility, it's your money. On the other hand, it's scary and daunting for a lot of people. They don't necessarily know how to do that properly. And so we're actually kind of enabling access, and we're giving them a wallet that can access all these things, but we're also bringing with it the security of a trusted name, a trusted brand, to manage that security for them, which I think is just a huge innovation.
Now, of course, there's hardware wallets, and we support those, like Ledger inside Coinbase Wallet. But I think what you're referring to, which I'm so glad you brought up in the Coinbase retail app, is we did launch this DApp wallet, and we had to build a lot of really cool tech behind the scenes to make this